Hello and welcome to the latest edition of The Exchange, brought to you by the New York Stock Exchange. I'm Douglas Jonas, your host. As a reminder, today's interview is for informational purposes only. The NYSE does not recommend investments or investment strategies. Now, today I am joined by co-founders at Amberwave Partners, both Dan Katz and Steve Miran. Gentlemen, thank you both for being here. Dan, I want to start with you. You talk a little bit about this jobs, security, growth, JSG strategy. What does that mean?
Well, great to be here with you today, Douglas. So what JSG investing is all about, the job security and growth investing, is really a deliberate investing strategy that we've engineered with the goal of delivering both financial returns and impact for all Americans and our communities. And when you look deeply at the jobs factor, the security factor, and the growth factor that are in our investing strategy, really what you see is that they've been engineered in order to do both returns and impact. So take jobs, for example. We are focused on investing on companies that are creating jobs here in the US and treating their workforces properly. That obviously has tremendous impacts in the communities in which those companies operate, because economic opportunity is so fundamental to all of our quality of living. But it's also a critical factor in the health of the business and returns for investors over time, because companies that treat their workforces better are going to have more productive workers, they're going to be able to attract more talent and grow. And that's the approach we've taken across the jobs factor, the security factor, and the growth factor in order to design this investing strategy that can do both returns and impact.
Now, Steve, I want to come to you because a lot of conversations around ETFs talks a lot about impact. What does it mean to have JSG impact?
Sure. So we believe that JSG can create impact by giving investors a voice. If you can invest in accord with your values, directing your savings at companies that are investing in their workers, hiring, training, keeping their workers here at home, investing in their supply chains, and supporting American communities, it can create a financial incentive for companies to undertake those actions. And if there's anything that companies respond to, it's financial incentives. So what we want to do is create a world in which no company ever again finds it more profitable to offshore their workforce instead of creating jobs here at home. We want to create incentives for them to invest in jobs, security, and growth, and thereby deliver impact for all Americans.
Now, of course, Steve and Dan are the creators of the ETF IUSA. I believe the only ETF ever to launch with an NAV of 1776. So you've got to love the history there. I want to come back, though, and talk not just about impact. Tell me about returns. What does it mean, JSG returns?
Sure. So we believe there are actually really good reasons for expecting JSG-specific outperformance. For example, we think of the benchmark study on the jobs factor found that companies that invest in their workers, the best companies to work at, outperformed their peers by 2 to almost 4% a year on average every year, right? So that's significant compounding over time. There's also plenty of academic research that finds that companies with resilient supply chains that avoid globalized just-in-time supply chains can be more resilient to shocks, right? If you have a globalized just-in-time supply chain, you can be highly exposed to any idiosyncratic shock anywhere in the world, whether it's a pandemic in China or an earthquake in Japan or a semiconductor supply chain bottleneck in Taiwan. Right? There's also plenty of evidence that companies that innovate in frontier technologies create lasting returns over time. So we think there's actually very good reasons for expecting JSG-specific outperformance.
Now, Dan, we hear a lot about the idea of ESG investing. What is it that makes it different than JSG investing?
Sure. So when you step back and you look at both ESG and JSG in context, what you see is that they're both impact investing strategies. And what that means is that they're both trying to incorporate in a broader range of impacts into traditional financial analysis. And our entire business is predicated on doing the hard work of understanding how jobs, security, and growth are affecting companies' performance over time. And that's the same thing that ESG investors are doing, those that are truly on the cutting edge. Now, they're doing it for a slightly different set of values, and in the case of JSG, the values that we've chosen to focus on are those that we think are most impactful and tangible in Americans' lives. And that's another key distinction with JSG, is that we're focused on measurable impact, right? We believe it's important for impact investors to be transparent, for their impact to be measurable, and for them to be held accountable. And that's why we've entered into the ETF market, and we're a fully transparent ETF, because we believe it's important for our JSG impacts to be fully transparent, measurable, and for us to be accountable.
And of course, that ETF listed here on the New York Stock Exchange, IUSA. As a reminder, if you caught this episode live and you're looking for additional ETF thought leadership, you can find it on our website, homeofetfs.com. That's homeofetfs.com, all brought to you by the New York Stock Exchange, the home of ETFs.